right? You got me running, got me running. Shake it, shake it, shake it, shake it. Raise your hands up, raise them up.
Okay, good morning, everybody. Welcome to the Forex Trading Asia Daily Currency Call, episode 294, inching to episode 300 soon. And it's the 20th of May, 2021, Singapore time, 11 a.m. So this is the currency call where you will get market economic updates, key support resistance levels, trade ideas, and more. This currency call is going to be very beneficial to both the long-term investors and short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. All right, so earlier just this morning, the FOMC meeting minutes was released. So I'm going to get Kim Hong here, Kim Hong currency analyst at LCMS Traders, to share a little bit about that. Kim Hong.
All right, thank you, Chinwei. Okay, so as mentioned yesterday, okay, we were supposed to take a look at the minutes and see if they provide any clues on when they are going to have discussions and talks on cutting back quantitative easing. Okay, so they actually did provide something. Let me share the minutes with you. Okay, where is the minute? Okay, oops. Oh my goodness, I think I'm facing some technical difficulties again. Can you guys hear me?
Yeah, we can hear you.
Okay, you know what? My screen just hanged, but since you guys can still hear me talk, then I'm just going to go on first, and then when my screen resumes, I'm just going to show you the minutes, okay? Right, so yesterday, the Fed actually mentioned that in the minutes, okay, that, or actually many members actually say that, oh, actually, wait, hold on a second, my screen is back. Let me get.
Yep, your screen is back.
Great. It seems like I need a new laptop soon. Okay, so as we can see in the minutes, all right, it is stated that a number of participants suggested that if the economy continued to make rapid progress towards the committee's goals, it might be appropriate at some point in upcoming meetings to begin discussing a plan for adjusting the pace of asset purchase. Okay, now this is actually a hint, okay, from the central bank that, you know what, if let's say employment continues to climb up, inflation continues to climb up, the US economy continues to open up, doing well, good GDP for the first and second quarter, then they may actually be considering a start of the talk, okay, to cut back on quantitative easing. And you see, note that they say that upcoming meetings, all right? So I would actually, sorry, let me get back. Upcoming meetings. Okay, upcoming meetings. So I would actually pay attention to this upcoming meetings, okay, meaning that, the next meeting being in June, okay, so I would actually pay more attention to the upcoming meetings because if the economic data releases for the next few months are going to be, good, are going to be like showing strong economic recovery, then this may actually trigger the talk to begin, all right? Now, so as a result, earlier today, if you look at the chart, USD actually strengthened across the board because of this, okay? Because of the hawkishness by this, the Federal Reserve, okay? Now, something to note is that this set of minutes is for the April 29th meeting, okay? Like I mentioned yesterday, much has happened since then, okay? We've seen that in April, the number of jobs being added into the economy plunged, okay? Retail sales plunged, inflation spiked, and so on. Now, this actually makes the upcoming meetings more important, all right? Because, well, we know that this minutes is in a way outdated, okay, since it's released before the string of economic data releases, okay? So yeah, pay attention to the upcoming meetings. Now, before you guys get too excited over this whole hawkishness by the Federal Reserve, I have to remind you that, okay, this is by no means, okay, an earlier interest rate hike from the Fed, okay? If you remember, okay, the Federal Reserve actually mentioned that they want to see a strong job market and so on and so forth, right? Okay, strong job market, strong economic growth, high inflation levels, and so on and so forth, okay? Now, as of April, unemployment rate is still at 6.1%, which is actually close to double the pre-pandemic level range, okay, of 3.5 to 3.7%. So I would say that it's still quite some time before the Fed will actually hike interest rate, okay? Now, that said, they can also slow down the quantitative easing, okay? Cut back on quantitative easing and eventually lead there. So we'll get there, okay? We'll get there. Now, yesterday I mentioned about Jean's article, right? So let me show you. So this is the article, all right? If you guys are interested in what happened to the US inflation back in April, yeah, just, head over to forextradingasia.com. I'll paste the link later on for you guys, okay? And yeah, you can just read this article. It explains why the Fed mentioned that it's transitory, the different reasons that the Fed feels that the recent hike in inflation is transitory, all right? Now I've done, okay, yep. So that's all I have to share today. Let me hand it back to Jinwei.
Okay, thanks for that, Im Hong. Yeah, so let's watch out for the economic data in the following weeks or months and see if there's any upturn and in relation to whether the QE will be reduced. All right, so on that note, let's get Scott here. Scott, the dollar index. Scott.
All right, hi everyone, and thanks for joining us again. So, like Im Hong mentioned, it's one of those things to just have a look at, but pay attention to meetings in the coming near future as well. So I'm just going to share the chart of the US dollar as well, thanks to Sam Trade. So we did get over 90, and what I would say combined with the minutes, even before that, we were seeing an uplift in the US dollar, on the live currency call last night with Daniel at 8 o'clock Singapore time. We could see things really turning over. The Aussie short call out in the group chat as well on EchoFin was, pretty nice as well. So there was some pips to be made there. So yeah, it was, you could see that the risk sentiment, in pre-market in equities as well, were really sort of cooling off. And we obviously saw, the situation with, when the risk appetite is quite off, even gold got a lift and it continues to as well. So when you really dive into all this short term, we could see a little bit more of an uplift on the US dollar, but where it was considerably low when it breached 90. And like I said yesterday, you're going to have to see something really significant to push it, below 89 to 88. And we didn't really see that. And we do have the unemployment claims data coming out at 8:30 this evening, Singapore time. So let's just see what happens with that in regards to if we beat forecasts, less people are applying for unemployment, and that's going to be a good sign for the fact that people are, earning money and economic activity is improving. So what that does with the US dollar, we've got 90.50 to think about. So let's see what it does when it comes back down to 90 flat. And then if it wants to break down, or we could see it move a little bit higher on the back of continued just inflation jitters. So I would say, there's no great, fantastic trades on the US dollar, but, maybe some, more upside in the near term just for now. And those are my thoughts currently on the US dollar.
Okay, thanks for that, Scott. Okay, so right now let's get into the currency in focus today, which is the yen and gold. So we have Jin here, Jin, founder of LCMS Traders, and a multi-million-dollar trader trading account with more than $14 million on a daily basis. All right, Jin, pass the time to you now.
All right, good morning, everyone. So today, looking at yen and gold, quite a bit of things happening so far. As Kim Hong and Scott has been talking about, the FOMC meeting minutes has impacted price a little bit, but there is actually going to be a little bit more to think about, not just what happened in terms of the minutes, but how is this going to lead to future way or the ways data is being interpreted into the future, right? Everything in terms of employment, inflation, even retail sales is going to have almost twice that impact as people will start speculating whether that data is going to cause the FOMC to trigger that tightening of the QE. So bear in mind, that those are factors that you want to think about. Every data now being released is likely to have a little bit more impact than it usually would. With that in mind, let's look at the news that could be coming up or that is coming up with here on Forex Trading Asia, looking at the economic calendar. Today is Thursday, so we've seen the meeting minutes here already. We had some Aussie employment numbers come out this morning, which has been a bit of a mixed bag, and we've seen that actually being applied to the Aussie dollar prices. Hasn't really moved that much. So watch out for, in terms of the US yen, the euro yen, the pound yen, and gold. What we have tonight, we have Lagarde speaking, we have some US jobless claims numbers was 473K, expected for 50. So it might look like about that same range. So not a big change there. Manufacturing index, employment, not going to do too much in terms of prices. What you want to focus on is on Friday night, where we have the US manufacturing PMI numbers being released. Was 60.5, expected 60.2. So we're still looking in that expansionary phase. Services PMI was for 64.7, expected 64.5, again in that expansionary phase, possibly staying within that range. I might actually anticipate a slight drop as we see the foot being lifted off the pedal after the whole impact of the stimulus has been played out. So even anticipate a slight drop, but we're still looking at some possible upside in the US dollar. This might actually make things quite straightforward in terms of how to trade it. Looking at the charts here, this is the US yen on the H4 time frame. We've seen that it hasn't done, in the scheme of things, it hasn't done too much during the FOMC meeting minutes release. At the most, it has done was a good 70 pip range from bottom to top. At this point right now, I think that we might actually see a bit of a consolidation, some upward move in the US dollar, some strength in the upward move to the US yen on the US dollar, maybe to test that 109.80 range again. This is on condition that we're going to see continuous good news coming from the US, good data coming from the US to spur on that likelihood of further QE cuts or further tightening in QE. But looking at it, we think that it might actually sit across, move up. But I think that the overall trend, the overall move is still for the US yen to remain within this 109.80 and 108 range. So I think that it might go up, test that resistance before possibly turning back down again towards that support level. So trading within this range, what you should be looking for at this point will be for it to reject that 109.80 resistance. At about 109.60, you're looking at a 30 pip stop loss for a very good 140 pip take profit level, almost a 1:5 risk reward ratio there. So a little bit more patience, wait for it to go up, test that resistance, reject it, then look for selling opportunities. That is the US yen. Looking at the euro yen, It's broken. It looked like it was breaking that 132.97 level quite strongly, but as it hit and went over, it came straight back in. At this point now, what you could be looking for is both a dual directional trade. What I mean by that is if we see the US yen continue heading higher quite strongly, you could actually be looking at further upside. But if you're going to see the euro dollar, looking at the euro dollar, if it does break below that 121.45 level, we could see that downside as we spoke about on Tuesday. If the euro dollar does break this support, if it does break this support and it does head lower, this is likely to drag the euro yen downwards. What I'm actually looking for, despite that possibility of both an upside or a downside trade, I think it'd be quite attractive to see a downside trade. So I'll be looking for the euro yen to break below 132.80. You'll be looking at a 30 pip stop loss for a good 90 pip take profit level, a 1:3 risk reward ratio towards the downside. If we do see it go up, a bit unlikely, but if we do see it go up, then you could be looking at that retest of 134. But I would be a little bit more careful with this. I would say at about 133.20, you're looking at a 30 pip stop loss for a 60 pip, 70 pip take profit level, a 1:2 risk reward ratios towards the upside. So nothing right now for the euro yen as it sits in that range, as it sits in that zone, but let it break either towards the upside or the downside, and you have quite a good trading opportunity in this case. Lucky last on the yen, the pound yen has gone up above 153.50. It has been supported since last week at that point, struggling to break below, struggling to go much higher as well. It's being resisted at the 155.26 level. At this point right now, I think that we might actually see a downside move, but on condition that it breaks below 153.50. Why I think that we might see a downside move, look at how the pound dollar is going. It's been going down as much as yesterday. I said that we're looking for it to test and bounce back up. If it doesn't bounce back up, it hits that resistance and turn back down, then another trade idea will be the pound yen for it to hit this 153.50 and track lower. So what you're looking for at this point will be for it to be about below 153.30. You're looking at a 40 pip stop loss for a good 80, 90 pip take profit level. Again, a 1:2 risk reward ratio at this point. If it fails to break this support level, then you could see that bounce back up, but be very careful for that bounce back up. I don't think it will go all the way to 155.26 again. I think if you see that hit and bounce at about 153.70, a 40 pip stop loss for a 100 pip take profit level or even less, a 90 pip take profit level, you're looking again at a 1:2 risk reward ratio. More to do on the euro yen than the pound yen. I think the pound yen would have to track lower before any decision. The euro yen is sitting at the zone right now, so more likely we're going to see something happen on the euro yen before the pound yen. And then as we see that possible strength in the US dollar come around, what is this going to lead to? Possible more capital flowing towards the US dollar. This might actually cause some volatility or some movements in gold. The last time we spoke about gold, if I zoom in a little bit, the last time we spoke about gold, I said it was going to sit and test 1773 before going up towards 1845. Look at that red line there. So it's done exactly that. It's tested that level before tracking up towards 1845. Right now, it has broken above 1845. It's sitting at 1876. You could be looking at further upside move towards 1954. But as we see that strength come around for the US dollar, as we see possible tightening in QE, I think that this might actually take a bit longer to play out rather than a straight line move. We might actually see a little bit more volatility, maybe test the 1845 level again, but I think that it will eventually track upwards towards 1954.
Okay, thanks for the analysis on yen and gold, Jin. Very comprehensive one. Yeah, so right now let's get Daniel here. Daniel, trading coach and LCMS trader. So I understand yesterday you guys had a night trading session. So would you like to share a bit about that?
Yeah, sure, Jinwei. Yeah, so yesterday really was quite exciting, but yet not much of a trade happening that day yesterday. So yesterday, just to highlight, yesterday we actually prepared ourselves to trade the CAD CPI data at 8:30. Because every Wednesday's evening, 8 p.m., we have a live sessions together with club members where we show members how to do preparation for the trades, how to use the 5 steps, and then how to trade within that 1 hour or so. Okay, so yeah, so we started to throw how to trade the CAD CPI data. We plan accordingly what we could be preparations, looking for possible upside if the CAD CPI data was good. However, even the data came out, it really moves quickly and retract backwards. So we really didn't act. We didn't act on a plan. So there's no action trade done on the Canadian pairs because it reacted differently from what we expected. Now this is really how we prepare, is to teach and review trade together with the members, learn not to force a trade or to take a trade just because of a sudden movement, and thus avoiding those unnecessary trades. Because if we have taken a trade just because the price moves, we could have lost money because there was quick retracement back upwards. And in fact, while we were trading, even after the CAD CPI data at 8:30, we were looking through all the currency pairs. Yen suddenly strengthened. Now we couldn't find a real reasons why there was no real news coming in for yen to strengthen. So we were monitoring up, and indeed we didn't immediately take a trade. Try to find the reasons why, and look at the based on the 5 steps. It tell us it's outside the Bollinger Band. Don't take. Let's wait for it to retrace back up before we even monitor or consider any trades. And indeed, it again retraced all the way up. So I would say that last night, the trading was really a disciplined trade where we look for we prepare a trade, we look for a trade, yet we learn how to stay out to avoid losing trades and doing unnecessary trades. So in the end, we end off with evaluating, came out 2 trade ideas for the medium term, where we got the Euro Pound and the Euro New Zealand for those buy trade ideas here. So yeah, it was quite a fruitful a lot of discussions among the members on the different pairs. What should they do? What should they not do? And they have the ideas, and we have a lot of discussions as well. So it was really interesting. So I would really encourage anyone who's interested in learning how to take a trade and learn how we trade as well. Join us on Wednesdays 8 p.m. In the LCMS Traders Club. Okay, now back to you, Jimmy.
Okay, thank you, Daniel, for the introduction. Yep. So do check out the chat. Our podcast is up and running in Spotify. Search for Forex Trading Asia in Spotify right now. And do join our Telegram group for the free Forex Signals, and subscribe to LCMS Traders YouTube channel for their daily recordings. And as Daniel mentioned, if you want to join the Traders Club, learn the strategy behind the signals, or get the faster signals, join the link over there. And if you're looking for a managed account, to check out forexbriefcase.com. Yep, so we have come to the end of the session today. We'll see you guys tomorrow for the Canadian and cryptocurrencies analysis. Thank you.